Oil has been denominated till now in U.S. dollars,
Yeah.
which has allowed us to print dollars to buy oil. So
Yes.
essentially we've bought oil with debt. What happens if that breaks down?
That if they switch from dollar denominated to euro denominated or any other denominated, that means there's less need to use dollars in the international markets buying, selling oil. If there's less dollars being used, the demand for those dollars will go down, the dollar will go down. Now, a lot of people have a lot of debt. China has a lot of debt, and Saudi Arabia has a lot of debt in dollars. They will lose value. Basically, it's a foreclosure on those bonds that they have. It's like you're losing money. They've already lost a lot of money since 2000 with the dollar going down as it is, but they were making enough money to not worry about it. But if they stop using the dollar, it'll go down and leave it even further. I don't know how far it could go down. They'll lose a lot of their value. To us, maybe it doesn't matter. I don't know what they'll do about it, but they're probably concerned about switching. I know China probably is concerned about switching from dollar-denominated bonds to other denominated bonds because they know the dollar will go down. Their value of their assets will go down. They have a lot of bonds, billions and billions of U.S. bonds. Same with Saudis. And even if you start switching, you'll see a downfall in the dollar, a downfall in their value of debt.
So you think they're in a mutual suicide pact where they just have to keep buying
I
US
think they're
debt
in a mutual
dollars?
suicide pact where we're not, it's an integrated world. We knew that. And the financial markets are integrated too, as well as the supply and demand of oil and the trade of goods and services. It's fairly integrated, so we might feel the problems first, but they will also feel the problems as well.
But if something disrupts the process of the U.S. being able to sell its debt, which it's financing the war on the debt, it's financing a lot of things on the debt, what practically would that mean if that happened?
If nobody wants to sell it any more debt, the interest rate has to go up, and it will. And that just means worse problems for the mortgage market because all these mortgages are set to whatever the going interest rate is. As it goes up, they have to go up, and then more people will foreclose. So yeah, we could see more and more problems in the U.S. It's going to hit China. It won't hit necessarily Saudi Arabia because they can just raise the price of oil, or the price of oil will raise a little bit, and they can get by on what they earn. So if they lose a lot of money, they can still get by. China loses a lot of money. I don't know what will happen to their government. Our government, theoretically you can go broke, you can go bankrupt, but you just print a lot more money. You just start printing money, and then you get hyperinflation, which has happened in a lot of countries. It's kind of funny because the U.S. is one of the worst debtor-type countries around. It would be like a Latin American. We're at the kind of point where Latin American developing countries used to be. All this debt, can't pay it, inflation, hyperinflation, all that thing. We might go into that if they don't start raising the interest rates. But if they do, then that's going to hurt the economy. It'll be like the Great Depression, only we'll still have high oil prices. So there's not a lot of options here, but through it all, there's a market. Either you'll have a high dollar or low dollar, either you have everybody foreclosed or half the people are foreclosed. The markets will still work through it all. The dollar will still be there through it all. It just might have hyperinflation. I think at some point they can't allow the hyperinflation. They'll have to raise interest rates and just have a depression similar to what we had in the 30s or something like that.